Hi guys, I hope that I find you well again. So this is probably the last video from the Mpumalanga prelim that is in relation to your cost accounting questions which were sent to me. I want to believe that you guys are okay with your preparation of the production cost statement, factory overhead calculations, direct labor cost calculations, direct material cost calculations, how to calculate wastage and measures to put in place if there is such wastage. And remember, it is very possible that the examiner can integrate your inventory valuation, very possible that your inventory valuation can be integrated with your cost accounting. So when you practice, also expose yourself to questions where there is inventory valuation and cost accounting all meshed in one particular question. I think in the Free State, they have something like that, if I'm not mistaken. Okay, so that means you need to do your FIFO, your weighted average, and maybe even your specific identification if there are questions like that. Okay, but my focus is on this particular question here, which says the owner was unable to achieve the targeted net profit of 150,000. All right, and then calculate how many jackets should have been produced in order to achieve this targeted net profit. Okay, so remember what we did in the previous Mpumalanga paper. We cannot do the same here because, as I alluded earlier on, the number of units produced and sold is 6,000 and the break-even point is 7,000. So here we are producing below the break-even point. So we're already making a loss. That means we cannot even cover our total fixed cost. We cannot even cover our total fixed cost. We are making a loss. So we cannot use this fixed cost here. That would be making a huge mistake. So I'm going to show you two ways in which we can do this one. Let's start with the A method. The A method is a simple way to simply say, when I am achieving my break-even point, when I've achieved my break-even point, the intended break-even point, or the break-even point that we have calculated at, is 7,083. That is the break-even point that we have calculated, 7,083 units. That is our break-even point. Now, we know that at this point, the number of units produced and sold, remember, it is what? It is 6,000. And if we are to make an intended net profit of 150,000, the simplest way would be then to say, remember, below is making a loss, and above we are making a profit, and we intend to make a net profit of 150,000. So if I take the 150,000 and I divide that by the contribution per unit, and for me to get the contribution per unit, I'm now saying selling price per unit. Okay, my selling price per unit is 135 minus my variable cost per unit, which is 85, here. Okay, so again, it's going to be 150,000. I divide that 135 minus 85, that's 50. Okay, let's get our calculator so that we don't continue with the wrong figures. Okay, so it's going to be 150, 135 rather. It is 135 minus 85. That's going to give us 50 over there. So I'll end up now saying 150,000, and I divide that by my 50, and that gives me 3,000. In other words, when I have achieved break-even point, I'll achieve it at 7,083. And if I'm to realize this profit, I can only realize this profit if I make 3,000 units. So in total, first I have to achieve break-even point at 7,083. And for me to then realize profit, and the profit that I want to attain is 150,000, I have to produce 3,000 units. So in total, for me to cover all my cost and achieve profit, I must produce 7,083 plus the 3,000. That therefore gives me 10,083. Okay, but I want to show you a different calculation again. Here's a different calculation. The other way that you could have done it is to say, you cannot use this fixed cost. Remember what I did in the previous question. So I cannot say 306. I cannot say 306 plus the intended profit of 150. I cannot say that. That would be a wrong calculation because this 306 is not the total fixed cost for the intended profit. In other words, I must calculate the fixed cost for the intended profit. And for me to calculate the fixed cost for the intended profit, I'll now say the break-even point that I want to achieve. Remember, to calculate break-even point, we say total fixed cost over contribution per unit is equal to break-even in units. So if I'm given the break-even, therefore, if I'm given the break-even in units, if I multiply that by my contribution per unit, it must give me the total fixed cost then. All right. So I'll come here and then I'll say my break even that is intended is 7,083. And if I multiply that by my contribution, remember we already have contribution per unit, which we calculated up here, which is your 50 Rand. So if I multiply that by your 50 Rand, that is 7,083 multiplied by 50. So I'm going to come here and I'll say my 7,083. If I multiply that by 50, that's going to give me now my total fixed cost, which is 354,150. So I'm going to have my total fixed cost, which is now 354,150. So I'll then come, then I'll say my 354,150. Then I come and add my intended profit now of 150,000. My intended profit of 150,000. And then I divide that by my contribution per unit. Remember, that's your 50 bucks. So let's come here and then we're going to add that all together again. So let's have our calculator where we now say the 354,150 plus the 150,000. All right. And that's going to give me 504,150. And then I divide that by 50. If we divide that by your 50, and that's going to give you your 10,000. All right. The computer is acting up there now. All right. Okay, let's see. We'll come back. Okay, so we will then say we're about to conclude this one. Remember, where we were now saying, I will simply say 504,150 divided by 50, and we ended up with 10,083 units, which is the same as what we would have got if we used this other simpler method. Okay, so this one was a very interesting one, which was in the Mpumalanga prelim paper because the business here was producing below break-even point. Okay, guys, so keep sending your questions. When I get time, I'll surely do make a quick video and send it to you. But remember, please polish your cost accounting. I don't think I'm going to do another video on cost accounting. I might just do on your recons as I've received some requests, recons, and probably budgets. Until next time, cheers, I'm out, and enjoy your studies.